Good afternoon, everyone, and welcome also from my side. Thank you very much, Will, for the nice introduction. When I think about your metaphor, I think that the version of the human derivative that I have at home now is probably more a complex structured product rather than a plain vanilla option. But I'm trying to cope with that, and I can tell you it's a pure pleasure and pure luck. So yeah, I'm very happy about that. And other than that, I mean, coffee helps, although this is a tea. So I hope I will not fall asleep during the next 30 minutes, which is very important because we now want to look beyond the mainstream. We want to dive into emerging markets, into emerging financial markets a bit. The 30 minutes I have actually only gives me the chance to spark you up a bit on that quite big topic. But I'm sure there are definitely some surprising and very interesting insights that I'm going to present. This is, yeah, great. Works as it's supposed to be. So, I mean, let's start and have a quick look at the global exchange landscape. I mean, starting with the classical stock exchange. The global landscape of stock exchanges is vast and diverse. And specifically here, when we look at the biggest stock exchange measured by trading volume, not a surprise for most of us that the US and China have the biggest shares in that measure here. The US accounts for roughly 40% of global market caps of all shares listed there. China is following that. As I said, we want to go beyond the top markets. China, from my point of view, is definitely not an emerging market because of two reasons. First of all, it's the growth rates, the economic growth rates of China are no longer two-digit growth rates. I think the last time they growed more than 10%, the Chinese economy was 2007. And secondly, also they are now the second biggest economy in the world. So as I said, we want to look beyond the top economies, and other regions, specifically Asia, South America, and Africa, are catching up. I have picked 6 examples here of global or of stock exchanges from emerging markets. The biggest stock exchange in Latin America is B3 from Sao Paulo, Brazil. The biggest one in Africa is the Johannesburg Stock Exchange. Both are, in terms of market cap of all listed stocks there, nearly on the same level as Istanbul, as well as Korea, and as the Taiwan Stock Exchange. Next to that, the National Stock Exchange of India is significantly bigger in terms of the total market cap. The National Stock Exchange of India is the largest stock exchange in India. Talking about India, I think it was interesting to also look at the stock market performance. On a long-term horizon, 20 years is here on that chart. At least for me, it was surprising to see how India and Africa are outstanding here in terms of stock market performance. We all know that US tech companies have recently seen massive increases in their stock prices. Actually, when the Nasdaq 100 would be included on that chart as well, it would also be around 1,000%, meaning the Nasdaq 100 level would be around 10 times of the value it used to have in 2004. Nevertheless, in terms of performance, the picture here is quite mixed. Specifically, investments in Latin America and in some parts of Middle East, or also in commodities, which are also included here, would not have increased your invested money massively during the last 20 years. I mean, I cannot and I will not give you any advice on where to invest your money. What I wanted to show here are some facts on stock exchanges in emerging markets. So what are the key findings now when analyzing the reasons of that recent developments of these markets. So what is behind the success of the emerging market? What is behind that they are actually catching up in quite a high speed to the well-known financial markets of the developed countries? I think the main reasons for that are mostly four different aspects. The first one is definitely that the economy in themselves, so the economy in that countries has recently shown success. Some emerging markets have significantly grown their economy, and this has also attracted a lot of global investor interest. Secondly, many emerging markets, emerging countries did regulatory reforms. They made them liberalized their markets, and I think definitely something we could also learn in our highly developed countries. The third aspect is when looking deeper into the financial market value chain, there have been recently also huge improvements in terms of technology, in terms of trading infrastructure, in terms of the technology of the stock exchanges, but also on the financial entity side. So the technologies that brokers provide, the trading apps, for instance, that brokers provide to investors, also to retailers. Now, this has massively increased in many countries. We will also look later on. And in addition to that, the maturity of the financial market also increased in terms of financial products. So new financial products have been developed. The assets under management in emerging market ETFs have skyrocketed as well. So this is also an aspect. And I mean, last but not least, the increased retail participation in these markets has also a big share in the success, or big share significantly in the increase of trading volumes of financial products. Good. Moving now from stock exchanges to derivatives exchanges, the insights are even more surprising and more massive. This chart shows the development of the total number of derivative contracts traded on exchanges. So we're talking about exchange-traded derivatives here. In 2017, the world was quite normal. It's essentially this small part here. The world was quite normal. The US accounted for, or North America accounted for 35% of global derivatives volume. Asia on the same level. Europe had 20% share, Latin America 8%. Now in 2024, Asia accounts for 82% of global trading volume on derivatives exchanges. North America 9%, Latin America 5%, and Europe 3%. In 2023, which is plotted here on the right side, it's nearly the same as I just mentioned for 2024. The main contributor of that increase in the share of Asia was the options traded in India. The National Stock Exchange of India, which we also have seen before as a stock exchange, they also operate the largest derivatives exchange globally in terms of contracts traded. The Bombay Stock Exchange is also amongst the top 4 global derivatives exchanges, and the B3 in Brazil is the second largest in terms of contracts traded. So we have here 3 out of the 4 largest derivatives exchanges. The 4th one is actually the CME. I want to point out then, when looking at open interest, the picture is a bit different. I have not brought a chart which shows the shares when you look at open interest, but there you would also find the big players like Eurex, of course, and also CME in the top ranks. So, I mean, that also shows one aspect in this emerging market exchanges, derivatives exchanges. There is not so much buy and hold, probably. So it's more like in and out, probably also more volatile. In the end, this gives some opportunities. So, and the question is, so which opportunities lie in these markets? So we see massive trading activity, we see high electronification, easy market access. I mean, everything I showed here was about regular exchanges, no dark pools or OTC. Of course, there's also a lot of trading volume still, OTC, but this is about exchanges, so accessible trading flow for all international market participants. This means massive opportunities specifically for market makers and brokers, but also for investment firms and financial products or ETF providers. In the end, what do all of these market players need when they want to enter this markets? Definitely market data, the lifeblood of capital markets, and maybe also some analytics on top. And where can you get this market data in high quality and via standard licensing model? You can also get it from Deutsche Börse, from Market Data and Services. At least you can get some of these markets, and as Reza already pointed out, you also get it from many of our customers, of cooperation partners, of the major vendors out there. And so the data is really accessible, and this is in the end also one change that happened. Nowadays, all exchanges around the globe, even in small African countries, you can get the data from from the vendor you like to work with. Let me quickly show you some examples of the markets we provide as Market Data and Services within our standard market data offerings. So we, as Market Data and Service, MDNS, we work with more and more cooperation partners worldwide. You know that we provide the data from Eurex, from Xetra, Index Data, and some others I actually mentioned here, from Deutsche Börse Group entities, as well as from external cooperation partners. Today's focus is on emerging markets. So, and for this masterclass, I brought some insights on the operators of exchanges in these emerging markets that do also cooperate with us. Let's start with the BMV Group, the operator of the Mexican stock and derivatives markets. It has been founded 130 years ago, and you can find everything to trade in the second largest economy of Latin America. The asset classes range from equities to fixed income, derivatives, ETFs, currencies, and indices. The data from the Mexican Stock Exchange, or the Bolsa Mexicana, Mexican Stock and Derivatives Exchange, can be received via our CEF data feed and can also be licensed under the standard license agreement of Market Data and Service that also covers the usage of Eurex, Xetra, and Index Data, for instance. Our second cooperation partner in Latin America is Santiago de Chile. Santiago de Chile Santiago de Chile is now about, the Santiago de Chile exchange is about to merge, or is in the course of merging with the exchanges of Lima and Colombia, the major exchanges of Peru and Colombia. This merger is ongoing, and in 2026, a fully integrated equity market will be existing, which will be named NUAM. Market infrastructure is also there on highest technological international standards, and the market can be easily accessed also by international brokers. Now, moving to India, BSE India is our cooperation partner from India, the second largest derivatives exchange globally, as I said before, and the exchange with globally with the biggest number of listed companies. You can license many information products from BSE India via Deutsche Börse, and you can consume the data via BSE's sophisticated market data feed or via many vendors. The list of all vendors that is licensed to provide BSE India data can also be found on our MDNS website. BSE India also provides the futures on the Sensex index. This was the index I showed before with the biggest or with the best performance. In India, there's one big aspect, as I told you before, the massive increase in options trading in India. First of all, the main part of the options trading is options on equity derivatives. And one of the main reasons for that massive increase in option trading is the retail investor. There has been a massive increase in participation of retail investors on that trading floor. This number surged from 2% in 2018 to 41% in 2025. So this is really backed by retail-driven trading floor. And I think this also shows the opportunity. Retail trading flow often brings good margins also for market makers, for brokers. And it's a really good second trading flow driver next to the buy side or institutionals. Then we have the TAIFEX, Taiwan Futures Exchange, 100% electronic marketplace with a high participation also of international investors. All TAIFEX derivatives products can also be licensed via MDNS. Then I brought the Pakistan Stock Exchange, one of our most recent cooperation partners and one of the leading stock exchanges in the Islamic world. Also for PSX, you can find the list of all vendors that provide PSX data on our website. Last but not least, I would like to move to definitely not an emerging market country, the United States, but an emerging financial market. Nodal is quite a young exchange, founded in 2007. Nodal, it offers power, gas, and environmental futures and options trading covering the North American region. So what is so emerging about that? These markets have always been OTC markets, so bilateral agreements between producers, dealers, and investors. Nodal brings that now onto a transparent and regulated exchange, also together with clearing services offered by Nodal Clear, everything backed by the highly sophisticated trading system T7 provided by Deutsche Börse. The growth is massive there in terms of trading volumes, and the volatility on these markets is as well very, very big. Nodal is our youngest cooperation partner in MDNS, and we are very happy to have them on board. We do provide all power and environmental derivatives market data from Nodal via our CEF data feed and our market data dissemination contract. I would like to close my short journey through the emerging markets exchange landscape with repeating again how important the easy access to market data is to leverage the opportunities that these markets bring. Now, the use cases, as I mentioned, for the whole financial services value chain are massive, specifically, I would say, for market makers, for brokers, as mentioned, but also for investors and vendors. Now, there's a massive amount of market data generated there. It can be used for trading decisions, but for a lot of other aspects as well. Please also use the opportunity to optimize your market data licensing processes by licensing via our standard licensing agreement, which, as I said, also covers some of the, as mentioned also here on that slide, on that page, some financial markets in the space of emerging markets. That's it. Thank you very much for your attention. I think we do have some minutes in case if there are any questions.
So should we go to the floor first of all to see if any questions from our in-person audience? If not, I have got some here. So Gerrit, could you elaborate more on the factors that have contributed to the massive growth in derivatives trading in India recently? You mentioned it's gone up to 40% retail investors. And is this growth going to continue? Is this it, or is it skyrocketing still?
I would know that. I would play lotto or something. No, I mean, as I said, the massive increase in trading volume is really backed by retail flow. So when I looked at it, I really asked myself, why why is this so massive? And I think there are several factors behind it. I mean, first of all, the economy in India has been quite successful recently. The wealth of Indian people have risen massively. I mean, we do also as Deutsche Börse Group have a lot of Indian colleagues. They are all very well educated. They are educated even in school about economy, about taxes, probably also about trading. So they are well prepared for that. I think in India there are more than 100 million accounts from private individuals, so trading accounts from private individuals at online brokers or neo brokers. The technology also, what I mentioned before, the technology has developed massively. Also, the technology and the easy access for trading opportunities to clients, like mobile trading apps, are quite used in India, probably much more than here. One big aspect is, of course, regulation. There is not a big regulation. There's not a big protection about retailers who actually, I wouldn't say they are gambling, but they are investing money in very risky instruments like options, derivatives, futures. There's actually currently you read a lot about also many private individuals losing a lot of money. So there are discussions ongoing whether these retail investors should be protected more. But until now, it's quite easy to trade there. And interestingly, also, I mean, compared to our European landscape and I think US landscape, where retailers in financial markets usually do not trade on exchanges. I mean, at least in terms of derivatives. I'm not sure whether any of you has an account or an online broker account where you can trade at Eurex, but you probably might trade CFDs or options, warrants, certificates, or something like that. This is different there. The retailer usually also takes part in the trading on a regulated derivatives exchange. And I think that's simply the driver behind it. Also, of course, indirectly, more wealth, more money leads to higher investments in ETFs, higher investments in investment funds, and then they, of course, also increase probably their trading activities at derivatives exchanges.
Fantastic. If there are any questions during this from the audience, please just oh, fantastic. Have we got a microphone or? Yes.
We have mics here on the floor.
The microphone is on. Yes. Okay. The headline of your presentation was about emerging markets, and you had Taiwan, for example, and also Korea in the overview where you presented, I guess, 5 or 6 exchanges. I just checked the GDP of South Korea, and it's 20% higher than the GDP of per capita in Spain, in Portugal, in Italy. So does this classification still work to talk about these Asian tiger states or countries as an emerging market?
A good point. Yeah, probably not. It was really difficult for me when preparing that to assess what's an emerging market and what's not. I already mentioned that for China specifically. I mean, China is definitely not an emerging market. It's a top economy. I think for me, the main definition of emerging market is high growth rates, high economic growth rates. And I actually didn't look that up, but maybe we can check later what the economic growth rates is of South Korea or Taiwan. But I totally agree. I mean, that's also an interesting point. The gap between emerging markets and the developed markets is going tighter. I mean, if there is a gap at all. Of course, there are some African countries where everybody would probably agree that they are smaller economies, and I mean, on the other hand, are they emerging? No? Are they growing so much? No? But I think that's a really good question. And I try to pick up some examples to show some showcases, to show some interesting trends there. But in the end, I guess there's no need to differentiate between emerging markets and developed markets, specifically not when you talk about exchanges, because they are really highly developed. They're on the same page. They have great technology. They have the market access is there for every global investor can access markets, as I said before. So in the end, I would say, yeah, it's commingling into each other.
Any other questions from the audience? Oh, yep, we've got another one at the back.
Thank you. So you mentioned about all these exchanges like B3, like BSE, TIFEX, and also the Chilean exchange. So what would be the unique USP for the customers to buy data from us than directly from the exchanges that you mentioned?
Yeah. I mean, there's one big advantage to buy the data from us, because I mean, I'm talking here to people that came to Frankfurt, so I would guess that most of you are working in the financial industry around here, and probably if that is the case, you probably already use data from UX, from Xetra, from the European Energy Exchange. So you already get what you need, and it would be just a click for you guys to, in our MDS interactive license management system, for instance, to also license for the usage of BSE India data. So the advantage is no additional contract with another exchange, no additional connectivity. You can get it via the existing connectivity you hopefully all have with Deutsche Börse already. That's one advantage. But I also want to point out that, of course, also our cooperation partners, you can also get their data from them directly. They also have quite sophisticated data feeds, data connection. You can have direct data connection. And if you are a bank from Mumbai, of course, go directly to BSE and you get it from them, probably makes much more sense. And yeah, we also work with more than 400 vendors, that cooperation partners. I mean, Bloomberg, Refinitiv, all the others in front. I can't name all 400, but it's also possible to get the data from them, but still the licensing you could do with us. And I think that's simply the advantage. Everyone is complaining about complex products, complex processes in terms of licensing. At least we give you the chance to license also BSE India data via the same licensing framework, also the same rules that you already know for Eurex. That would be hopefully an advantage.
Just to expand on that, so you've spoken about our standard license model and data delivery. How does that compare to the licensing models and the data delivery in these emerging markets? How would they differ?
I think also there the spread reduces it in the course of time, meaning also their licensing model are on international standards. I know that in the detail, licensing models do differ, but in essence, differentiation between display, non-display, specific categories are also the same on their side. Technology-wise, I would also guess every one of them uses fixed formats, the standard formats. So there, the difference is definitely also not big.
Any further questions from the audience? Fantastic. Well, Gerrit, that was wonderful. I think we should all put our hands together and say thank you to Gerrit.
Thank you.